So the market's basically become a very formulaic market in its sense. Another week, a new all-time high. That has been the pattern for quite some time, guys, and it's been very easy to make money on this market. You just basically be bullish in the market and really no consequences to it. The bulls have not received any consequences for the actions that they're taking. They're just making more and more money, and the pattern doesn't look like it's going to be stopping anytime soon. I know all the bears out there that are trading the macro, guys, I'm a little bearish myself on the long term of the market. However, in the short term, it is going up. The angle of ascent is going up. There's no denying that. As you can see here, from the time we were here to basically up, straight up, no ifs, ands, or buts about it. So what does that mean for us this week? Well, if we just look at the S&P, for example, we made a new weekly higher high, new all-time high. So again, it's going to be the same thing the following week. We did have a pretty massive week, so we got one of two options for the S&P, and that is going to be either a further expansion to the upside, or we're going to consolidate in an area, kind of forming a base similarly to what we had here when we had our red candle. But as you can see here, that we just basically exploded out of that range once we had that 1 week red consolidation. So is this the same pattern? Are we going to have another massive move of approximately 7% on the market, which would take us approximately, if we're 7%, right to that magical 545, 50 number? The SPX would probably hit 5,200 by March at that rate that it is going right now. If we jump over to the SPX or the actual SPY index, and we say 7% from where we are now, puts us right smack dab at 54, 59. So we're about to possibly blow out the month, possibly blow out the week, possibly blow out the day. And I know everyone out there is basically going to be like, no, we can't. You've been doing it quite some time, as we can see here. We only got on the week the single move off of the Nvidia earnings that basically ignited a massive spike in the market. However, the market did sell off on Friday afternoon, which we'll be talking about a trade setup in this video so you guys can mirror that. I'm going to be doing it on Sunday, the second markets open. So it's going to be a fantastic time. And then how can you take advantage of it in the cash market as well? We'll be discussing all that and more today, kind of going threads, looking at what's new for this week on the news. And as always, guys, if you would not mind hitting the subscribe button and having bell notifications on, it really helps us out growing the channel and also keeps you informed when we post content. We live stream on Rumble this month every single day, except, during the week. And we will be streaming on YouTube periodically through that time. So make sure you guys are subscribed and have hit the like button as well. Thank you so much. So let's get down to brass tacks. Well, first of all, we need to get rid of the weekly ranges and establish a new weekly range. Well, simple as we did on the previous video, we snap the lines to the range and establish our bullish, our bearish, and then any notable ranges that we would establish. So breakout 5, 10, 13, new all-time high. Breakdown 493.56. And really, I'm going to say the gap. The gap is going to be where our previous week is where we establish importance, which was the previous week's high. We literally went from bottom of the week to the top of the week in a heartbeat with NVIDIA's earnings. So we should defend that area. You should be rotating like we are now, possibly rotate back down to that area and then push up. That's how you can take advantage in the cash market. You're going to be looking for that 503.50 retest. That would be approximately, I would say, assume just by looking at it, and we'll get a fib right here, 38% retracement. Yes, we're right around that 38% retracement, which is standard for the S&P. It really likes 50%. However, the reason I'm saying 50% is probably not likely is because the 501 mark. However, if we say the move actually goes higher and we basically retrace 50% off that move, it would mean that the first of the week we would see probably 513.14. So I'm actually going to snap a line there just so we can play this theory out during the week and put a dotted line. That's where we're going to be targeting for the bullish move, especially because we close outside of value on the week. And what does that mean? Well, if you guys know the futures market that I trade, as you can see here, I have it set up the volume profile rotation for you. This is the 1 minute, this is the 5 minute right here. The yellow line is the area that we closed below. So I'm expecting on open us to start rotating back through these levels and rotate an open bullish with a gap on the market. I expect at least to gap back to around 509. So you're looking at from close back to open 0.27, 0.25 of a run. I expect like a gap and go. That's what I'm expecting until we get to 513. Then we can start looking for some more bearish news, let's say, and let's just quickly jump over to what some of those bearish news could be during the week. Well, first of all, fear and greed is extremely greedy right now, meaning Warren Buffett's famous phrase, when people are greedy, you should be fearful, and we're in extreme greed, so it should be fearful. However, that's really not applying to this short-term time spans. It's more of the long-term. And if we jump over to the news for the week, as we can see here, we got PCE on Friday. However, Monday, nothing real much. Bill auctions Tuesday. We do have consumer confidence, so that could kind of put a damper on things, but nothing really much. And GDP. We get a preliminary GDP print on Wednesday, which could be we run up to 513, consolidate there, get Wednesday. GDP comes in at exactly the same level it was last time. So we're expecting 3.3. If it comes in lower, the markets could start retracing, and that's where you get that 50% retracement back to 503. And then we basically go into a couple Fed speakers, Williams speaking on Friday after the close. So that'll be interesting in the futures market. And nothing much until you get to Friday. Friday is a pretty jam-packed news day. We have ISM manufacturing PMI, and we have a bunch of Fed members speaking, along with they actually are going to publish the net speculative positions. And if we jump over here, you guys know I've been following this for quite some time. They're still bearish, this market. It's like, when are you guys going to learn that losing billions of dollars is not a profitable trading strategy? I don't know if someone's maybe needs to tell them that, but yeah, they're losing money like hand over fist as this market keeps going up. And there's no real big news events that are happening. I thought PCE was this month, but we only have PCE price index Thursday. Geez, I'm blind, guys. I apologize. They're expecting 2.4 versus 2.6 previously, and then core to be 2.9 to 2.8. So they're expecting a drop in PCE. However, we know the CPI reports, but they're more volatile, so it doesn't necessarily reflect on PCE. We're going to see how this comes in. Last time it didn't come in too hot, but we could see a hot report either way. The market's going to have a pretty nice reaction off that. So first of the week, I expect not a lot of turbulence. Maybe GDP stirs something up on Wednesday, but I think that later part of the week is going to be the more turbulent week, and we will keep you appraised of it with our midweek update video. So make sure you guys are on the lookout for that. Now, back to the market where everyone cares about what we're going to do. So we kind of got our levels for the S&P here established. We didn't actually establish the higher range. I apologize for that. So as we can see here, 5, 10, 13 is the range to the upside. And that is where we're going to basically be looking for that rotation up. And then 5, 13, 46 would be the bullish target that I have, especially if you're trading the cash market. Now, NASDAQ. Well, this is where the story gets interesting, guys. NASDAQ failed breakout. We've seen this before. We've seen where the NASDAQ doesn't break out, but then the following week does break out. However, since we don't have a breakout, we are basically going to get rid of the lines that we had previously. And this is where you got to pay attention to. I basically said I was going to be looking at Apple last week, and we'll go over what I saw, what predicted, and what actually happened. And if we just look at the week for the NASDAQ first, we basically have a close inside a close inside a close. So we've basically been closing for 3 weeks now inside this tiny little range, having massive expansions during the week, but we're basically just going nowhere for 3 weeks. So that's good and that's bad at the same time. So NASDAQ 440.59 is where we find resistance or the breakout period, and then the 421.63. I know everyone wants to make those 420 jokes. I know market, you got to get one more dollar before we make those jokes. And then the importance of this previous rotationary point of 434.98. That is where I'm going to be looking, similar to S&P, of what we get. And NASDAQ is more of a 38% retracement number. So expecting the NASDAQ to have a breakout similar to the S&P and then come back down to that 38% retracement, maybe come up to 442, 443. That is where I would expect kind of like, breakout, struggling to break out because tech's been running. So maybe it's taking a break right now. But again, chips are leading. So if chips are leading, tech should follow in theory. Now, we're going to get into some of the concerns that I have for this week in just a moment, but I do want to review Apple. Apple. Well, it's a mixed bag. I said that I expect this head and shoulders not to play out, and it's not playing out, right? So we came down. This is where you're expected to break the neckline, and we are just doing nothing. We actually got above the 200, and I said, what did I say, guys? I said it on the Rumble stream, so make sure you guys go over Rumble so you can catch us when we tell you this juicy bits of information there. I said that 2 candle closes. Before you all get excited, 2 candle closes above the moving average. I put it in the Friday video that you guys saw. And what happened? We completely crapped the bed on Apple. We basically said goodbye 200, goodbye 50, goodbye support. Now we are at risk for Apple. If it doesn't get its crap together and we start calling it crapple from now on, I call that anyway, guys. I'm not a fan of Apple, but again, the stock is going to be crapple soon. Essentially, if we look here, we could be setting up a bear flag pattern here. Standard bear flag where we're going sideways, consolidating to break a lower. So that's going to be one of the threats that we're going to be still having our eyes peeled on Apple. Let's just jump over to Microsoft. Microsoft looks exactly like the NASDAQ, nothing much there. And then we have to go over to Russell. This is where stuff gets interesting. And we're going to jump back to the NASDAQ in just a moment, but I really need to cover the Russell for you guys. So we basically have an inside week of an inside week. So we actually establish the same ranges, guys, but now we establish importance to the ranges of the week. 20114 is where you want the Russell to start breaking out of and then continue bullish. 196.39 is where you look at the Russell and you want to be saying, okay, if you start breaking that, I'm below the 50, I'm heading probably to the 200 weekly or the 200 daily. Either of which is not a good thing. I did say also that we most likely were going to come down to the 50-day moving average. We caught a bounce there. Now we need to rotate up higher. Now we don't need to stall out here. We filled the gap previously here on Russell. It's actually a double gap. And essentially what that means is Russell and NASDAQ are going to be your cues to see where the S&P goes and if we're going to be actually bullish. And full disclosure, I'm going to get completely bonked out on this trade. I'm going to try doing on Sunday, especially because we close outside of value, but I'm going to look at it some more. However, I am going to be looking bullish on the market just because that's the overall trend. And then we have to see, because NASDAQ is in a territory that if we start breaking down below 430, 498, I'm going to be concerned. I'm going to be like, okay, well, we're going to start filling this gap. And that's a nice, juicy price action of shorting. However, you have to be very, very careful with those short. You don't want to just be like these net speculative positions that are just shorting the market endlessly. And even if you take that short position, your target of the 50-day moving average is not far below the weekly breakdown. So as the week progresses, we could very easily find the 50-day moving average at the support level that we have, not have a weekly breakdown, and then we basically just, bounce higher. So keep those things in mind. Those are some things you have to keep an eye on during the week. And last but not least, Dow Jones just piling up higher. Again, I don't trade the Dow, guys, just because it's just boring. Like, let's just face it. Dow is stable and boring. And really, I'm not into that. So Bitcoin looking like it's consolidating around here. This is what we use as the risk on, risk off mentality of the market. And right now it is looking like kind of like tippy toe, 1 foot in the door, 1 foot out the door. So we're going to have to keep a eye on that. VIX coming back down to its range around $13. So we should see that expectation to continue. And last but not least, if we look at yields, absolutely crapping the bed on Friday. So is that signaling that their yields are saying, okay, we're going to just go sideways for a little bit as we wait for the Fed to cut? Or are we basically setting up a bigger pattern here, possibly a W pattern forming here, but really invalidating with that candle on Friday on the 30? Or is the yield curve going for around 257 of stay inverted forever? As we can see here, this is the range that it's been consolidating in. So we definitely could see a drop in yields, especially on the longer term end of the rate. So we're going to have to keep an eye on that. And last but not least, guys, the last threat of the week, New York Community Bank, again, below the 9-day moving average, right back what I said, hey, this candle looks like we're going to just be FRCing this thing, and we're most likely going to just keep going sideways to either the next earnings or March 11th when the bank term funding program ends. You really will see all the carnage maybe in May of that program ending, but you never know what happens between now and then. Would I be trying to buy the dip on this stock? Absolutely not. This could very easily turn into a penny stock, if it not is already, and no one's excited about this. Plain and simple, we have to see maybe on an earnings play it'd be interesting, but I'm going to keep an eye on that just to see any stress in the banking sector at all. And just recapping what happened this week, just so you guys didn't miss a single thing. Monday was a holiday. Tuesday, not really much. We had Fed minutes on Wednesday, which just kind of, the market just didn't like it, but it didn't really do much. And Thursday, we had NVIDIA earnings. So all these news events basically went straight out the window, even though the Fed speakers were like, hey, we're gonna do this and that. And as always, on speculative positions, adding to their losing position, breaking rule number 1. So Fed expected to basically pause in March and May with a slighter higher chance of a cut in going into May, but really the cuts truly get priced in June and July with a chance of easing at 70% in June. So guys, that pretty much wraps it up for today's video. Fatal couldn't make it today just because he had some outside obligations. Kind of shoe on the other foot where he leaves me high and dry. However, we'll be back for the live stream on Rumble Monday through Friday. So make sure you guys go down in the description below and check that out. We kind of go over stocks you guys recommend. We leave it up to you, especially when it's a lower news week as we're heading out of earnings season. Kind of looking at my future trades as live they're going on, so you can kind of see what I'm thinking there. And as always, guys, make sure you follow us on Twitter handle on the screen right now for you, where we post the reverse repo, interesting news topics, and some of my trades I'm going to start posting on there, just to kind of getting more into futures now, so getting more of a handle on it, so kind of give you guys live action shots of that. So again, thank you all so much for watching, and I hope to see you guys in the live stream tomorrow, which is going to be a fun-filled week.